Hey, what's up, good people? For those of you that are new to the page, go ahead and hit the like, subscribe, and notification bell. Follow that prompter below. Make sure you don't fall for spam in the comment section. They'll be there before I can get there. And lastly, anything I say is not a suggestion for you to buy, hold, or sell. By the way, today is the 31st. It is the end of the Moo promo, their most aggressive promo so far. Up to 13 free stock by depositing as small amount as $100. So make sure you click the link below and download Weeble, Moo, and get them funded today. If you've downloaded, get it funded. I got some guests today, good people. I got Stocks with Josh. I'm gonna be talking really fast today. I want to get into what's going on with the market. Say hello to the good people.
Hey, good family. Yeah, we're going to burn through it because when Larry and I sit down, we can take 10 minutes and turn it into 20 or 2 hours
30.
Easy.
Yes.
So let's hit it, Larry.
All right. So I'm going to play for you guys a video here, and we'll discuss it from here. Please listen.
But the market has that wrong. But the Fed will maintain the higher rates as you're in a recession in order to bring inflation down. And they're going to do that, and they said they're going to do that. And it's all about Powell's plan that he talked about at
He told
Jackson
us to
Hole.
expect pain.
Expect pain for consumer and businesses. So you take a survey of the consumer confidence, and you take a survey of CEO confidence, and the CEOs have a real good insight as to what's happening with their companies. 81% of these CEOs now think there's a recession coming in the next year. 81%, and that's a record high number. So expect a recession, expect earnings to be considerably weaker, and expect credit spreads to blow out because the pain plan is all about higher rates.
So you guys heard that. This was a commentary, of course, from CNBC yesterday. And I'll play a little more of that on a later video. I agree with him actually wholeheartedly. He made a mistake and said Powell's pain, and he called that correctly because Powell can force us into a recession, all right? He really can force us into an early recession if he's too aggressive. Now, you guys have to understand that him causing the job market to do a reversal is actually part of his job right now, and is part of the avalanche of things that will happen in order to get inflation under control. It's unfortunately, the market is cancerous. And the only way to get the market back is we have to inject poison to kill poison.
Perfect
So
analogy.
exactly. So we have to give chemo, which is another poison, to something that's cancerous. And that's where we are. I want to talk about one play in particular on this one, and it is ticker symbol GORO. It's gold resource, it's a gold play. People run to safety when a recession is coming. They'll run to oil, they'll run to staples that you have to pay. Healthcare kind of goes up. Actually, some education, and companies like CVS, companies like Ulta, lipstick. Women like to feel good about themselves because they can't go out, they can't go party, money's tight. These are some of the companies that will make money during a recession. One of the plays that I've brought to the family is ticker symbol GORO. And my belief is we start to buy now when it's not running up. So when they do announce that we're in a recession, then it will run up from there. So I'm going to give it to Josh so he could give us a micro look into this company.
So before we go over, I just want to briefly introduce the chart DXY, which is actually the dollar index. I'm going to touch on it briefly. Larry, pop me into that, won't you?
Yes, sir.
If the DXY, if we pretended this wasn't a chart on the dollar, but it was Tesla or our favorite stock, man, it would be looking beautiful. The 100 and 200 day moving averages are pointing upwards. They're fanning out. We're above the 200, the 100, and the moving average. We have a peak here, which we are consolidating up against. If this were any stock, Larry, I'd be buying it. Mm-hmm. Now, here's the problem. If the dollar goes up, the markets go down.
And yep.
All right. And so I just wanted to point that out to you guys as an overall market overview, that's what we're looking at. We're looking at real bullish momentum on the dollar. That's what the Fed is trying to accomplish right now. He is trying to strengthen the dollar.
Right.
Right. But now going into GORO, what is desirable about that is that this thing has consolidated. I've talked to people about accumulation, markup, distribution, and decline.
Yes.
This has been through decline and
Yep.
it's in accumulation. And so rather than trying to get it, guess the bottom, there's
Right.
a buy zone I'm going to point out to you on the chart. So do you have
Yep.
anything you want to?
Well, just like when the dollar goes up, gold goes down. But when the dollar goes down, gold goes up.
All right, let's check out those charts. So in a nutshell, I just want to point out that we had this big decline in GORO. You see the 100 here and the 200-day moving average pointing down. We see them spread apart, right? We had for the first time the 100-day come and begin to curl up towards the 200, cross over. This little area here was the beginning of a new bullish trend. Now today we're sitting above the 15 EMA. So we could easily get a bounce off of it. Right now, we're having a long-term consolidation between two zones. We have the bottom zone, which Larry gave you guys that price. The bottom accumulation zone is $1.50. That's the safest area of accumulation. The middle of that zone is actually where it's sitting today at $1.71. So the accumulation zone is between those two ranges. And anything that is above that, right, that's going to be the potential new markup zone. So we're trying to accumulate this when we're down in the lower range of the stock.
Yeah, and that's a good play. And here's what previously I said: the buy zone was between 160 down to 150. But because of what he's talking about accumulation, then I'm starting to dip my toe in at 170, and yesterday it went down to 168, right? So hear me clearly. I'm only allocating about 1/10 of the money that I'm going to put into this play and buy them at these prices right now.
And Larry, if you don't do that,
Yes.
you're not going to get your total position
Exactly.
in time. It'll run away from you.
It'll run away from you, and you may know there's no guarantee that's coming down to 150. There's no guarantee that it's coming down to 160. So that's why I'm dipping my toe. Then if it comes down to 160, I'm going to buy a little more aggressively. If it comes down to 150-ish, if I don't have a stop loss set, then I will actually begin to load up.
And can I
wait.
comment on the stop
Yes,
loss?
1 second.
Go ahead.
And then you go to stop loss. Here's what I want you to know right off the bat. This stock is not going to be green right now. But if you believe that a hard and deep recession is coming, then this is a game of patience. Go ahead.
If we broke below 150, 149, 148, then I would say that we would be going into a zone of making a new low. If it broke below that 148, then we have to imagine it could go down to 80 cents. It's held that 150 really well.
Yeah.
So if you wanted to play a stop loss, the only stop loss I would consider would be around 146.
There you go. There you go. You have it, good people. Let me end by saying this on this stock. Listen, here's why I like this stock, and because I went back to the recession of 2008. So for those of you that don't know, I'll say it really quickly again, remind you guys. In December 2008 is when the official committee said, which is not Jerome Powell, said, hey, we're officially in a recession. It was December 1st of 2008. And then they also said, oh, by the way, we've been in a recession since last year. So it took them 12 to 14 months to say that we're in a recession. I believe that the same thing is going to happen. We know the election is coming up. We know the midterms are coming up. We know that they came out with this campaign to say that we're not in a recession because of strong job markets before the GDP numbers came out. All right. So you guys see what's going on here, right? But let me show you this, and we'll end with this. Again, I showed this before, but it's important to see this. Here is where they announced that we're in a recession. We're in a recession, right? They announced it here, right? But as you can see here, let's say GORO was let's just say GORO was around $4. 3 months later, after they announced we're in a recession, $8.50. You see that? Or 8.85. So that's why I'm dipping my toe in it now, and I don't care if it stays red. I'm just literally DCing in small amounts, and when it falls below my purchase price, then I'll buy a little more. This is not DCing buying daily. This is just bringing my cost average down. That's all. And then I'm just, once I put the amount of money that I've allocated for this stock, once I max that out, I'm done. I'm just waiting.
Well, that's it for me. I'm
All right.
glad to be on the show today.
Hey.
Haven't seen you guys in a while.
There you go. So, good people, I'm going to end by saying this to Josh's. We're going to shoot another show on Josh's page. Come over there and join us on Josh's page. He's going to talk about another stock. I'm going to reiterate this stock. And also, tonight, I'll be on with Keenan Grace and Stock Mo Live. And today is the end of this promotion with Moo. By using my link, you get an extra 3 stock, and today is the end of that promo. A lot of you guys have opened it up, but you haven't funded it. Make sure you fund it with a minimum of $100 right now today. That's it. We'll see you tomorrow. Live, love, laugh, and learn. What's your sign off?
Peace and blessings.
Peace and blessings.